Hey guys, welcome back to our channel. Well, we are passionate about helping people with business and accounting. In today's video, we're going to talk about the Employee Retention Tax Credit, specifically Notice 2021-49. So if you're interested in learning about the ERTC update, keep on watching. So before we get into the notice, let's quickly have an overview on ERTC or ERC. So Congress enacted ERC as part of the CARES Act. Then they modified the credit with both the Consolidation Appropriations Act and the American Rescue Plan in 2021. So eligible employers must meet 3 of these tests for March through December 31st, 2021. So they have to be fully or partially suspended due to operations, due to government mandates. They have to have experienced a significant decline in gross receipts during the calendar quarter or are qualified as a recovery startup business. So this is only specific for 2021's quarters 3 and 4. So that was new information out of this notice. So the definition of an eligible employer has not changed. So it's one that conducts a trade or business. It's not part of the government. 501c organizations exempt under 501a is deemed to be engaged in trade or business with respect to operations. So let's talk about the suspended operations test very quickly. So the government must have more than a nominal effect on the business operations, including essential businesses. So what is nominal effect? Not less than 10% of gross receipts or not less than 10% of total hours of service by employees. Voluntary suspended operations do not qualify. So qualified wages for 2020. So to determine qualified wages for 2020, so if the employer had more than 100 full-time employees in 2019, then only wages paid to employees not providing services due to either the shutdown or decline in gross receipts count toward the employee maximum. If the employer had 100 or fewer full-time employees during 2019, then wages paid to all eligible employees during the quarter or all wages paid to eligible employees during the government order. So you have to meet either the gross receipts test or the suspended operations test. And it's during the period only. So only during the period that they were shut down. Qualified wages for 2021. To determine qualified wages for 2021 quarters, if the employer had more than 500 full-time employees in 2019 or 2020, then only wages paid to employees not providing services due to shutdown or declining gross receipts count toward the employee maximum. If you had fewer than 500 employees during 2019 or 2020, then all wages paid to all eligible employees during the quarter for the gross receipts or all wages paid to eligible employees during the government order, so the suspended operations test. So for the suspended operations test, it's only during the period. In determining qualified wages, you can also include qualified health care plans. For 2020 quarters, $10,000 in qualified wages over the entire year. And for 2021 quarters, $10,000 per quarter. So how does PPP and ERTC work? So you can't double dip. You have to separate out the funds that you're going to use for ERC and the funds that you're going to use for PPP. So qualified wages for which the employer claims ERC are not eligible for PPP forgiveness. An employer can elect to not include qualified wages for credit purposes, thus allowing an employer PPP loan forgiveness for otherwise qualified wages. So all that's saying is you have to separate out. Payroll can be eligible for ERTC even if an election is in effect if a PPP loan is not forgiven by reason of a decision under subsection 7(a)(g) of Small Business Act. So how does the employer elect which wages go where? So you can make the election by not claiming the ERC for the qualified wages on your 941, or an employer may be deemed to make the election based on how the employer completes the PPP loan forgiveness application. The employer should consider the impact of omitting eligible expenses on the ERC qualified wage amount. So what's the credit amount? So 2020, it's 50% of Social Security. For 2021, it's 70% of qualified wages. So for Q1 and 2, it's against your Social Security tax. And for Q3 and 4, it's against your Medicare tax. How do you obtain the credit? For 2020, an employer should first reduce its federal tax deposits. Then they can claim in advance on Form 7200, or they can file their 941 taxes and claim it there. For 2021, the advanced credit payment procedures described in the second bullet point of this slide, so it can only be used if the employer had 500 or fewer full-time employees in 2019, and the advance payment cannot exceed 70% of average quarterly wages paid by the employer in 2019. They can also claim it on Form 941. So in this notice, so notice 2021-49, they touch on the recovery startup business. So this is only applicable for quarters 3 and 4 of 2021. An employer makes the RSB determination for each quarter. An organization described in 501c and exempt from taxes in 501a can be treated as an eligible employer due to RSB. Aggregation rules still apply. They have to have been carrying a trade or business after February 15th of 2020, for which the average annual gross receipts of the employer using subsection 448C3 for the 3 taxable year periods ending with the tax year that precedes the calendar quarter for which the credit is determined does not exceed 1 million and that is not otherwise an eligible employer under the gross receipts or suspended operations test. Now, the notice has examples and really goes deep into what a recovery startup business is. So if you want to learn more about that, please make sure to read the notice. Now, in the notice, they also covered on severely financially distressed employers. Aren't we all after 2020? Okay, so what is a severely financially distressed employer? Is one that meets the gross receipts test and whose gross receipts are less than 10% of 2019 or even 2020 if not in existence in the same quarter in 2019. All wages paid to all eligible employees are qualified wages regardless of employer size. The prior quarter elections also apply to severely financially distressed employer determination. Check the notice, gives a ton of examples. Now, there is a statute of limitation for these returns. So for 2021, quarters 3 and 4 only, the assessment statute of limitation is 5 years after the later of the date on which the original return that includes the calendar quarter with respect to which the credit is determined is filed, or the date in which the return is treated as filed under that code. The normal statute of limitations of 3 years applies to all other quarters. So the 5 years is only for third and fourth quarter of 2021. The other quarters is 3 years. So wage deduction. So once you're ready to record this, how do you book it? So the employer must reduce wage expenses in the tax year in which the taxpayer earned the credit, not in the year the taxpayer receives the credit. So for those of us who are trying to claim the 2020 employee retention tax credit, you'd have to amend your returns because they want us to record it in the year that it was earned. So 2021, so let's talk about owner-employee. So shareholders, do wages paid to an employee who runs more than 50% of the value of a corporation or his or her spouse qualify for employee retention tax credit? The wages of a majority owner of a corporation and his or her spouse are ineligible for ERC if the majority owner has a brother or sister, whether by whole or half-blood, ancestor, or lineal descent. I did not see that one coming. So if you caught my last video, I said, owner-employee, yes, we're doing it. They're getting a credit. With this notice, that does not happen. So as long as you have lineal descent, you do not qualify for ERC. So I'm going to give myself as an example. I have 2 children. They are lineal descent. I do not qualify. I know. So under 267C, the constructive owner of stock. Stock owned directly or indirectly by a corporation, by or for a corporation, partnership, estate, or trust shall be considered as being owned proportionally by or for its shareholders, partners, or beneficiaries. So this is talking about constructive owners. An individual shall be considered as owning the stock owned directly or indirectly by or for his brother and sister, whether by whole or half-blood, spouse, ancestor, or lineal descent. An individual owning, otherwise than by the application of paragraph 2, any stock in a corporation shall be considered as owning the stock owned directly or indirectly by or for his partner. Stock constructively owned by an individual due to family or partner attribution shall not be treated as owned by him for the purposes of again applying either of such paragraphs in order to make another the constructive owner of such stock. So notice gives a ton of examples on constructive owners. It's definitely worth a read. So your spouse gets constructive ownership. Now, for shareholders, we're going to cover 152. We talked about this one in depth in the other video, but basically if you have any employees that have a relationship, these do not qualify. All of these on the screen do not qualify for ERC. So it is a bummer that shareholders with any type of lineal descent do not qualify for ERTC. That's really all I wanted to cover in this notice. I hope you found this video helpful. If you did, please give it a like, subscribe to the channel if you haven't, share it with a friend, and I'll see you in the next one. Bye.